Hello viewers, welcome to my channel. I'm Hashim. Last video I have explained you about the income tax rules and exemptions. Now in this video I'm going to explain you about different types of income. Income Tax Act has not specified the same rate of tax for every income. So we must know which incomes will have which rate of tax. Different rates of tax are there. So for our convenience, we classify the incomes into three categories. That is casual income, special income and normal income. So in this video, I'm going to explain you in detail the meaning of casual income, special income, normal income and what are the rates of tax applied on those types of incomes. And this knowledge is very much necessary while computing the problem. You must know it. So watch the video till the end, and there is no difference in these provisions from the last assessment year to this assessment year. So you can watch the video of assessment year 22-23 as well. So if in this video on the board it will be written as 22-23 also, just ignore it because the provisions are same. Now casual income. If income is earned due to an element of chance, and then such income is known as casual income. Example, any income which is unexpected, not a regular routine income, it's unexpected income. An element of chance is there. Luckily, the SSC got the income. It is called casual income. Example of casual income are winning from lottery, horse races, crossword puzzles, games, betting and gambling and television program games. All these will come under casual income because there is an element of chance. Luckily you got it. Winning from lottery, luckily you got it. Unexpected. So it is called casual income. Now income tax incomes are taxed at a flat rate of 30% on casual income. So when a person is having casual income, special income, other income, normal income, so what he has to do? He has to separate the casual income and tax on casual income at the rate of 30%, flat rate. No basic exemption. No basic exemption for casual income. For other incomes, basic exemptions are allowed, but casual income, no basic exemption. Completely taxable. And no tax rebate under section 87A. In the next video, I'm going to explain you about this tax rebate under section 87A, but tax rebate will not be allowed for casual incomes. Then special incomes. Special incomes are taxed at a concessional rate or lower rate of tax. Any income on which there is a concessional rate given by Income Tax Act or a lower rate of tax given by the Income Tax Act, that is called casual income. These incomes are taxed at a flat rate. Two types of rates are there, flat rate and slab basis. Flat rate will be applied for casual income as well as special incomes, but slab basis will be applied for normal incomes. Now here, while calculating tax on special income, the basic exemption is allowed. No basic exemption is allowed for casual income, but basic exemption is allowed for special incomes. The examples of these incomes, these special incomes are short-term capital gain. STCG stands for short-term capital gain on transfer of securities, and the securities are equity shares and units of equity oriented mutual fund. In mutual fund, different types of securities are there. If the securities are equity oriented units, then the STCG on these units will be a casual income taxed at a flat rate. Then long-term capital gain, LTCG, long-term capital gain on other assets. On this also there is a flat rate of tax, example 20%, right? So these type of incomes are called special incomes. Lastly, normal incomes. Any income which is not a casual income, not a special income, is called normal income. So all the incomes which are neither casual income nor special income will be called as will be called as normal income. So under normal income, what we have to do? We have to take the aggregate of income from salary, income from house property, profits and gains and capital gains if it is not a special income. If it is not a special income, then we should take capital gain also, income from other sources. So all these incomes total is called normal income. Now for normal income, basic exemption is allowed, and the aggregate of all incomes are taxed on slab basis. Slab means different rates for different levels of income. So for applying the tax on normal income, we have to classify all the SSCs into non-senior, senior and super senior. Non-senior citizen are those people whose age is below 60 years. Below 60 years, whether men or women, they are called non-senior. For them, the slab basis are first up to 2,50,000 nil, no tax, up to 2,50,000. That is the basic exemption limit. So 2,50,000 nil. Next slab goes from 2,50,001 to 5 lakh. So if an SSC is having an income between 2,50,001 to 5 lakh, he will be taxed at a rate of 5%. The tax rate applicable is 5%. For those non-senior citizens, whose income is between 2,50,001 to 5 lakh. If the income is more than 5 lakh, 5 lakh 1 to 10 lakh, if this is the range of income, the tax will be applied at the rate of 20%. If the income is above 10 lakh, 30%. So 0%, 5%, 20%, 30%. These are the four rates applied. Up to 2,50,000 nil, 0%. From 2,50,001 to 5 lakh, 5%. From 5 lakh 1 to 10 lakh, 20%. Over 20 lakh, 30%. Now come to senior citizen. Senior citizen are those people whose age is 60 years and above, but below 80 years. 60 years and above, but below 80 years. They are called senior citizen. And the slab system on senior citizen, first 3 lakh rupees nil, no tax, 0. From 3 lakh 1 to 5 lakh, 5%. From 5 lakh 1 to 10 lakh, 20%. Over 10 lakh, 30%. The only difference between non-senior and senior, here up to 2,50,000, here up to 3 lakh. That's it. Last one, super senior citizen. A person who is 80 years of age or above, 80 plus, then they are called super senior. In that case, the basic exemption limit is 5 lakh. So up to 5 lakh rupees, nil, no tax. 5 lakh 1 to 10 lakh, 20%. Over 10 lakh rupees, 30%. These are the different slab rates applied. And these slab rates are same whatever we have in the last assessment year 22-23. So in this video, if on the board it is written as 22-23, don't be in panic. The same provisions are there last year and current year, so you can watch the video till the end to get a complete command on the different types of incomes. Apart from problems, they will ask in theory, what do you mean by casual income? What do you mean by special income? Like that. In this video, I'm going to explain you about the classification of incomes, how incomes are classified, how taxes are applied on different types of incomes. So this video is very, very important. In the coming problems, if you have not watched this video, then every problem will be a difficult problem for you. So give more concentration on these problems. And even in examination, they may ask you the concepts like what is casual income, what is special income, like that. So before starting, before going ahead, take the screenshot of the points which I have written on the board, then I'll explain every point in detail. Now, classification of incomes. So, incomes are classified into two types: incomes exempted from tax and taxable income. In the coming one video, I'll give you what are the incomes which are completely exempted from tax. Now, we concentrate only on taxable incomes. Now, the taxable incomes are classified again into three categories. The incomes which are taxable can be conveniently classified into three categories. The first one, casual income. Second one is special income. And third one is normal income. One by one, I'm going to explain you first casual income. This concept is very important. Many times in examination, theory is asked, what do you mean by casual income? What is the tax rate on casual income? So if an income is earned due to an element of chance, unexpected income, non-recurring income. So if an income is received with an element of chance, element of chance and luck, non-recurring, unexpected income, that is called casual income. Such income is called casual income. Now examples. What are the examples of casual income? The first important example of casual income is winning from lottery. A person has purchased the lottery tickets. One of the lottery tickets he won. So he will receive the lottery prize. So winning from lottery prize is the best example of casual income. Secondly, horse races. Income from horse races. Then crossword puzzles, card games or gambling or betting or winning from TV programs or lucky dips conducted by business establishments, etc. are the examples of casual incomes. All these things you have to write in examination. First of all, the meaning of casual income, any income which is earned with an element of chance, non-recurring, unexpected income is called casual income. Example, winning from lottery, horse races, any types of other races or card games, crossword puzzles or any kind of other games, TV programs or winning from lucky dip conducted by business establishments, gambling, betting, etc. All these are the examples of casual income. Now these incomes are taxed at a flat rate of 30%. These casual incomes are not clubbed with any other income. It should be kept separate because there is a flat rate of tax on casual income. 30% is the flat rate of tax, on which again if surcharge is there, it will be added, and health and education cess will be added to that. For example, if a person has won a lottery prize of 1 lakh, so 30% of 1 lakh, 30,000 rupees he has to pay the tax. So finally he will be left only 70,000. So even after winning 1 lakh rupees lottery, he will get only 70,000 after deducting tax. Apart from tax, health and education cess 4% will be there. If surcharge is there, that will also be added. That is the procedure. Now, for casual incomes, no basic exemption is given. Basic exemption is allowed for special incomes and normal incomes. But basic exemption limit is not allowed for casual income. Even if a person won a small amount of 100 rupees, on that 100 rupees also tax will be calculated. For casual income, no tax rebate is allowed. Tax rebate will be allowed for lower income groups. In the coming video, I will explain you about tax rebate. For lower income groups, some concession is given in the form of tax rebate. But tax rebate is not allowed for casual incomes. That's all. So this is the brief explanation of casual income. Now I am coming to the second one, very important, that is special incomes. Special incomes are taxed at concessional rate or lower rate of tax. Those tax on which the tax rate is lower or concessional rate, these incomes are taxed at a flat rate. Like here also, casual incomes is taxed at a flat rate of 30%. Special incomes are also taxed at a flat rate. While calculating the tax, the SSC is allowed the basic exemption limit. Remember, no basic exemption limit is allowed for casual income, but basic exemption limit is allowed for special incomes. These incomes are example of these special incomes. Short-term capital gain. Now from now onwards we call it as STCG, short-term capital gain on transfer of securities. Securities means shares, bonds, etc. If the securities are transferred, then gain arising is short-term capital gain on transfer of equity shares. This is an example of special income. Long-term capital gain on other assets. Short-term capital gain on transfer of securities. Long-term capital gain on transfer of any other asset. These two are the examples which are called special incomes. Now, profit on sale of any asset is an income. If an asset is sold, asset means any property which is purchased for using, not for selling, but later on it is sold. Example, a person has purchased the house, not for selling purpose, but for giving them on rent. Later on, he sold the house. It's a capital asset. The income arising is a taxable income. According to Income Tax Act, land or building or both, jewelry made of gold or silver, shares, etc. So examples they have given what is capital asset. Land or building or both, jewelry or shares, etc. are treated as capital asset, and profit on sale of capital asset is called capital gain. If a gain arises on sale of capital asset, it is called capital gain. On the date of transfer or sale, if the asset is held by the assessee for more than 3 years, then it is termed as long-term capital asset, and the gain arising is long-term capital gain. So how we can say an asset is a long-term capital asset or a short-term capital asset? Income Tax Act says, before selling the asset, if the assessee has held that asset for more than 3 years, then sold, it is called long-term capital asset. Example, a person has purchased the gold 5 years back. So for 5 years he was holding the gold. Now during the current previous year he sold that gold. Then the gain arising is a long-term capital gain because more than 3 years. Similarly, if a person has sold the house property, he has purchased the house property 10 years back, then any gain arising on that selling of house property is a long-term capital gain because he held the property for more than 3 years. In case of shares and equity-oriented units of mutual fund, the period of holding is 1 year. Some exceptions are given. In case of shares and equity-oriented units of mutual fund, in mutual fund different units are there. One of the unit is equity-oriented unit. If a person sells the shares after 1 year, or if a person sells the units of equity-oriented funds of mutual fund, in that case, the period of holding is 1 year. After 1 year, if it is sold, long term. Before 1 year, if it is sold, it is short term in case of shares. Now, in case of land and building or both, the period of holding is 2 years. For land, building or both, the period of holding is 2 years. Before 2 years, if is sold, it is a short term capital gain. After 2 years, if it is sold, it's a long term capital gain. For shares, the holding period is 1 year. For any other asset other than shares and land and building, the period of holding is 3 years, right? Otherwise, the asset is considered a short-term capital gain. That means if the asset is sold below 3 years, or in case of shares, if the shares are sold below 1 year, or in case of land and building and other land and building or both, if it is sold below 2 years, within 2 years of purchase, it is called short-term capital asset, and the gain arising will be short-term capital gain. Now, LTCG on other asset is taxed at a flat rate of 20%. Remember, long-term capital gain on transfer of other assets will be at a flat rate of 20%. You have to remember all these tax rates. For casual income, the tax rate is 30%. For long-term capital gain, LTCG on other assets, it is flat rate of 20%. This income is not clubbed with any other incomes, that is normal income. Actually, we have to separate it. While computing the tax liability, we have to segregate how much is the casual income, keep it separate, and 30% tax. How much is the special income, that is LTCG, tax on LTCG, keep it separate. Don't mix up with normal income. Then note, the LTCG on shares, one exception is given. The long-term capital gain on shares, that is equity shares and units of equity-oriented mutual fund, if security transaction tax is paid, then 10% on gain in excess of 1 lakh without indexation. One special provision is given by Income Tax Act. If the assessee sold the shares, long-term, if he got a long-term capital gain on sale of shares or equity, units of equity-oriented funds of mutual fund, then in that case, if the gain is up to 1 lakh, no tax. If the gain is more than 1 lakh, then 10% of gain will be taxed, flat rate, 10%, without indexation. What is indexation? I will explain you while dealing with capital gain. This provision you have to remember. That's all. So far I have explained you about casual income and special income. Lastly, normal income. So an income which cannot be treated as casual income and special income is considered as normal income. Very easy. You have to check. If it is not a casual income, if it is not a special income, then definitely it will be called a normal income. For normal income, basic exemption limit is allowed. First condition, no basic exemption is allowed for casual income. Basic exemption is allowed for special income and basic exemption is allowed for normal income. The aggregate of all heads of income is taxed on slab basis. The person may have different sources of income. Income from salary, income from house property, profits and gains of business or profession, other sources. He has different types of other incomes. All the sources of income will be aggregated together. The total normal income is taxed at slab basis, not flat rates. Here it is a flat rate 30%, casual income flat rate 30%, and special income taxed at a flat rate of 20%. But in normal income, slab system will be applied. The different slabs will have different rates. Now, the tax rate applicable to an SSC whose status is individual for the assessment year 22-23 is as follows. Now we are focusing on our current assessment year 22-23. So, if the residential status of the individual is resident and he is an individual, then the tax rates applicable for the current year is as follows. In case of resident non-senior citizen, who is a non-senior citizen? A person who is below 60 years of age is called non-senior citizen. For non-senior citizen, what are the slabs? First 2,50,000 tax rate nil. Concentrate here because these provisions we have to apply in the problems, coming problems. If you do not remember these rates, then problem will be difficult for you. Now first 2,50,000 nil, no tax rate. From 2,50,001 to 5 lakh, 5% is the tax rate. That means more than 2,50,000, but up to 5 lakh. So whatever income you have, on that income 5% is the rate of tax. If the income is more than 5 lakh, that is 5 lakh 1 up to 10 lakh, for this income the tax rate is 20%, and over 5 lakh, that means 5 lakh 1 and above, the tax rate is 30%. So 4 rates you have to apply: 0%, 5%, 20%, 30%. 0% up to 2,50,000, 5% from 2,50,001 to 5 lakh. Then 20%, 5 lakh 1 to 10 lakh, 30%, 10 lakh 1 and above. That's all. This is for non-senior. Now senior citizen. Senior citizen means a person who has crossed the age of 60 years but below 80 years. That means more than 60 years, 60 and above, 60 years and above, but below 80 years. He is called senior citizen. For senior citizen, the first slab is first 3 lakh nil. Here it is 2,50,000. Here it is 3 lakh. So first 3 lakh rupees nil, no tax. Second slab from 3 lakh 1 to 5 lakh, up to 5 lakh, the tax rate is 5%. From 5 lakh 1 to 10 lakhs, the tax rate is 20%. From 10 lakh 1 and above, 30%. The same rates of tax, 0%, 5%, 20%, 30% for both. But the difference is, here the basic exemption limit is 2,50,000 and here it is 3 lakh. That's all. Lastly, super senior citizen. Who is super senior citizen? A person who is 80 years and above. 80 plus. If a person, then he is called super senior citizen. In case of super senior citizen, the tax rates are first 5 lakh. First up to 5 lakh rupees, nil. No tax for super senior citizen. Second slab, from 5 lakh 1 to 10 lakh, it is 20%. Then 10 lakh 1 and above, it is 30%. So only 3 slab rates are applied for super senior citizen, that is 0%, 20%, 30%. In between 5% we don't have. no 5%. These are the slab rates to be applied for super senior citizen. Lastly, tax liability. The tax liability means income tax. That means the basic income tax we calculate to the basic income tax surcharge if it is applicable. Surcharge is not applicable for every individual. If the total income exceeds 5 crore during the previous year, then only surcharge will apply. Below 50 lakh, no surcharge. Then plus health and education cess. It's mandatory every problem. We have to calculate health and education cess at the rate of 4%. So basic income tax plus surcharge plus health and education cess will give you tax liability. Now how much is tax due or refund? Sometimes it will be tax due and sometimes there is tax refund. That means income tax department will return back the money to the SSC. So how to calculate tax due or refund? Take the tax liability just now we have calculated. Whatever tax liability is there, from that deduct two items, TDS and advance tax. Deduct the tax deducted at source and deduct the advance tax. We'll get the tax due or refund. If you are getting positive figure, that is tax due. If you are getting negative figure, it is tax refund from the income tax department. That's all. So this video, I have explained you about the classification of incomes as casual income, special income and normal income. Remember, these provisions are very, very important. Don't underestimate. Watch this video not once, twice, thrice. Then only you can be able to remember all the provisions. And these provisions we are going to apply in the coming problems. And very frequently in examination, they will ask you about casual income, special income like that. So inshallah, we'll continue our discussion on this introduction in the next video. So if you're satisfied, give a like to the video. Share my channel. Subscribe if you have not yet subscribed and buy the super thanks which is given below my video. And inshallah, we'll continue in the next video.